Hello, everyone. Welcome to the Pro Trade Room Plus and the CPI report. My name is Lee Goldstein. I'm the trading director for 10-Minute Trades. Please remember, I'm not a financial advisor, and all the trades we discuss are for educational purposes. It is possible to lose money trading futures, so trade carefully, please. I do want to welcome everyone who's watching us on YouTube. This is our free stream of the week. So I want to say hello to everyone that's out there, everybody out there. So good morning, everyone. Can you hear me okay and see the charts? Let me know if you hear me okay and see the charts. Okay, so here's the scoop on CPI. First things first, it's a raised margin event, and this is a report that has. I never thought I would ever say this. This is the most unsafe report that I've ever seen. So I'm recommending that this not be traded in any way, shape, or form with any instrument known to man. And I will say this, it's entirely possible that there are people out there, and I'm thinking of someone from Canada in particular, who will trade this as a breakout with gold or bonds, and they might have a winning trade. But if you look at the results of what's been going on with this report since May, all right, since May, June, it was such a problem that we didn't get filled. And I'll show you the videos, okay? Chantal and I don't make this up. When we did our testing, just to give everybody an idea of what we do, so I make the schedule so you really understand with complete transparency how this system works. It's difficult to make a schedule a month in advance or 2 months in advance because the schedule then would invariably change radically. So I do the schedule every Thursday for next week. That way, I'm as current as possible, and we don't have to make that many changes to the schedule. It's inconvenient to make changes, and people plan their time around various trade rooms. That's the whole idea. You know, trade on a schedule. We don't want to change the schedule all the time, a lot. So we make the schedule Thursday, and then Sunday or Monday, we do our testing. And then I've got to do extra testing if what we've come up with is different or new or uncertain. So I can't tell you how much time I spend testing after our initial testing gets done. Now, fortunately, not every report requires significant testing. Some of them are pretty stable, but many of them, like this report in particular, require significant testing. For instance, we determined there's nothing safe to trade. We don't have a setup. There's been so many whipsaws. Like I said, going back, not a big winner because there was a lot of slippage. June was no fill. There was no liquidity. We couldn't get filled on bonds. July, there was profit available, but we got out flat because it was so difficult to get the profit. August was a stop. September was a stop. October was canceled because there was an unsafe early move and the euro whipped. November was one of the worst whipsaws we've ever seen on this report. So all we have are recent losing trades and trades that worked, significant slippage, and difficult trading. So that's not to say that there are people that trade better than me. I do not claim to be the world's best trader. I trade like normal people, if you know what I mean. Yes, I've been doing this a lot, but sometimes if there's slippage, there's not a whole heck of a lot you can do. Let me give you an example. Let me show you what I mean. Here was July, okay? This was July. Now, in July, we had a DMM with bonds and gold, with a 20 bracket on gold. Okay, that's a moderate size bracket for this type of report. And bonds was a 6 bracket. That was our recommended possibilities that month. And what happened was there was a very nice move, and there was a lot of slippage. Look how high up the candle I got filled. It was possible to get profit. And watch the chop too. It chopped a bit. It was possible to get profit. Now, that particular month, look at gold. So bonds had a lot of slippage. Profit was possible. Now, gold, did you see what gold did before it went up? It moved down. It moved down. Now, it may not have moved down 20 ticks. So gold could have been safe if you could have gotten a good fill. It would have depended upon what the slippage was like that particular day. Okay. Bonds had volume that day. So let's even assume that July was a profitable trade. Okay. Let's assume that. Let's err on the side of what looks like reality. It looks like July would have been okay, depending on how you traded. August was a stop. Unfortunately, I don't have the video for August. I can't prove it. You'll have to trust me. September was a stop. September, we were looking at gold and bonds. I mean, gold and bonds and the euro have been what we've been looking at on this report. We have traded NQ, we've traded ES, and again, of course, depending upon the amount of slippage that you experience. August, August just didn't get to our profit area, and it reversed and hit our stop. It was a very strange move, also a very strange move. Even when there's profit available, this report is difficult. It's difficult. It looks like it actually hit the first target for $46 of profit, and then it did a horrendous reversal and wound up losing 300. So it was a loser. It was a losing trade. You couldn't get out fast enough to make $46. That was September. And then October, let's see what happened in October. I don't remember October. I don't remember yesterday. Bonds and gold still. October, my notes show that something happened early. Well, it doesn't really matter. It was a whipsaw loss. So it wasn't that it was early, it was a whipsaw. Okay. So that was a loser. And that was October. And let's look at November. So take a look at November. November, Euro was one of our possibilities. The testing was really good. 40 tick stop. That tells you something. 40 tick stop. 25 tick stop on gold. Those are relatively significant stops. Okay, it's not a 12 tick stop. That means the euro had some significant up and down movement while you were in the trade after you got filled. And that was one of the worst whipsaws of the year. And when I say that gold, every instrument whipsawed last month that we looked at, you can't even see the move down. You can't see it happen. So you could argue with me and say, well, I want to trade this report no matter what, because I think you can make money on this report. So I've reached the point in my trading career, I guess you could call this a career. I've reached a point where sometimes you have to look at what's going on and you really say to yourself, what's the point? What if I trade one bond contract? So hey, I mean I like trading this report. I love the excitement. I love the possibility that it could be a big move. I like this report to trade, but I can't trade a decent size NQ or ES because the margins are high. Bonds are struggling with liquidity on this report. So, and when we look at the last four, we didn't make a penny. In fact, we didn't make a penny in the last six. Yes, there was some profit available in June and July. In June, nope, I take that back. There was some profit available in July. But let's say you made $1,000 in July, and then you got stopped out four times in a row. August, July, and then August, September, October, November, all of them were losers. So sometimes you have to say to yourself, well, I don't know why I want to trade this. And that's, I didn't even lose any sleep last night. I knew, look at, I knew, I thought I was watching a video. Gold just moved. That was kind of quite the little move there. 18 ticks like in a second. Um, anyway, I think everybody gets the idea. It's super risk, super risk. Um, I'm going to watch the euro. I'm going to watch gold. I mean, I'm tempted to watch bonds. I think we've traded bonds have more liquidity than most other markets. If I were absolutely dead set that I had to trade this report, I'd probably trade ZN. One of the other issues is this. So let's say you want to trade the report. and you want to try and protect yourself by using the software to automate. You have to understand that if a market moves so fast that software can't keep up with the market, your attempts to automate could just wind up generating a software error and screw up the trade. So it's difficult because of the behavior of this report to trust. It's difficult to trust because this report hasn't given you anything to trust. That's the big issue. What do you trust? The euro doesn't look safe. Bonds, been real tough to make money. You got to go all the way back to July at the earliest, maybe even May. Maybe even May. NQ and ES, I'm sure there's been a few people that have traded them, made a few dollars with them, but overall, there's no reason to think that their behaviors would have been better than what we've been trying. If there's a whipsaw on the euro, a lot of markets will whipsaw. It doesn't mean they're all going to automatically whipsaw, but last month, everything whipped. Most everything. I mean, there's always a market you could find that did. Now, I thought yesterday that I had it solved. I thought yesterday that I had it solved. We traded oil on this report. Oh, right. I've got a setup. And oil had a great looking move, right? So I set up, we had an oil DMM, complete whipsaw. So I found a setup that works for oil. If I use a 18 tick bracket, I can find a working oil trade. I don't mind trading oil on this report. I love trading oil on this report because it gives me an instrument that's under the radar. It's going to be less prone to having a whipsaw. And we've had oil trade very well in the past. So I went back to, I found a setup that worked in November, big bracket, significantly bigger than what we used in the past. And that bracket, there it was, a beautiful trade in November. And I could not get a single other month to work on oil over the past 4. So I don't have an oil trade. I thought maybe I would have an oil setup. I was excited, thought maybe we could trade oil. There's not a safe setup that we think people should trade, and the indexes have margin. So that's my report on this report. I know it's our YouTube stream of the week, but trading is trading. And you've got, especially the way we trade, we say it over and over and over, and we're going to have a holiday challenge next week. And what am I going to teach in the challenge? Trade the reports, and people are sick and tired of hearing me say it. Trade the reports that give you the best opportunity for profit. This is not the report that gives you the best opportunity for profit. But let's do this. Let's set up our gold trade. Let's set up the oil trade. What do you think? Let's set up the oil trade. Now, the reason I don't even think the euro makes sense to watch, now that I'm thinking about it, the euro has mixed volume. What does it mean, mixed volume? The euro's getting ready to roll over in a couple of days, so there's significant volume on 324, almost as much as 1223 contracts. So I would not trade the euro. That means liquidity is going to be extremely difficult. If liquidity is a problem, it's going to be worse than if the euro had proper volume on the contract. It doesn't. So I would not trade the euro because of mixed volume. That would keep me off the euro on this type of an event. A normal event with less volatile movement would not worry me quite as much. But because this is nothing but a difficult behaving report at the moment, I would not do the euro. Okay. Now our gold setup triggers at 8:29:59. Now everyone thinks that inflation is going to be down. It probably will be. Does anyone really believe 100% what they say about inflation? I mean, they're talking that they think inflation is going to get down to 2.5% next year. I don't know. First target of 10, second target of 20. I'm going to do the exact DMM and a stop of 25. And if my first target gets hit, target one stop move, I'm going to move my stop to break even, -2. That's what I'm going to do on gold. It's only a test. Like I said, I do not think this report is safe to trade today. 4 in a row, stopped out. Let's check the size of our bracket. You know, you can trade if you want to, but why not trade when the possibilities are in your favor? Don't you want to trade when the possibilities are in your favor? So there's our gold setup. And then we have an oil setup that I tested, right? So I'm going to try oil. Let's see if maybe oil is a possibility. It needed, let me see if I saved a template. I don't remember if I saved a template. CPI with oil. So I used a bracket of 18 was the only way I could get some safety. My first target is 8. My second target is 22. My stop is 20. And I would do the same thing if my first target gets hit. I'll move my stop to break even on this one. And here's the funny thing about this report. Here's what I think is funny. I think it's not going to be that crazy a move. If it was 5 years ago, I'd probably be trading this. Or 2 years ago, I'd probably be trading it because we always traded it, no matter how many stop outs there were in a row. Now, was that smart? Probably not. Probably not. Checking the brackets. All right. So we've got oil. Putting the time back to what it's supposed to be, 8:29. So, all right. How about a report? Who's trading? Who's trading? Who's not trading? Who's trading? Who's not trading? Tell me what you're doing. Let's check our time sync. Checking time sync. Time is looking good. So anyone out there, Caesar on MGC, I'm not going to say anything. Larry, I thought for sure you'd trade it, but I truly believe that this is just not a smart report to trade. But like I said, the funny thing is, I think there's been so many bad outcomes. There's going to be a good one. But and sometimes I'll take a trade based on just the probabilities. Sometimes I will take a trade based on the probability. But this is just not a good. It's just not a great opportunity. It's just not a great opportunity. Why? Why keep? Why keep doing it over and over? Everybody knows that ridiculous Einstein comment. David, you're trading it, but you're not trading cash, so I don't count that. I don't count prop trading. It's sim trading. So, do you have a lot of money in your prop account that you can build that you can support the loss? You have enough money built up. Okay. So, and I'm assuming you're trading it small. I'm assuming you're not going to trade it big. So, this kind of event really highlights a significant difference between a prop trade and a live trade. First of all, the data feed is different. You're not going to get the same fills that I would get on a live trade. You might actually do better in a prop account than you would in a cash account on this report. I think it's a real possibility, actually. So I think that I should be able to say that we have a Top Step account that I'm trying to find it. I've had so many problems with Top Step. So I understand. Don't get me wrong. I'm not knocking the whole prop trading thing, but I just feel like we want to be very transparent about the differences in using a prop account versus a cash account. It's a significant psychological difference. Significant psychological difference. David, I'm having I mean, Larry, more of a business issue than a trading problem. What problems have you been having? So let's watch. I'm going to watch the market. I've got oil on the right. I've got gold on the left. And, everyone knows that trading a report like this in sim, like I'm doing, is not the same as trading it live. But let's see what happens. Look, it's just our analysis says this report should not be traded today. Just too much risk, too much bad behavior. Now, Larry, Chantal had some of those types of problems. Calvin, you kill me, man. You just kill me. Um, I think Chantal had some of those problems, Larry. Maybe not exactly the same issues in Apex. In Apex. Yep, Chantal's here. So I'm predicting that the news won't be creating crazy whipsaws. I'm thinking it'll be more normal movement today. That's my gut feeling. But, we're not trading it because it hasn't behaved well. So I'm not going to put myself in a corner if it's a perfect trade. I'm not going to cry in a corner. All right, 15 seconds. All right. You can see gold has some volatility. Not that much. It's not crazy. Glad I wasn't trading gold, my friends. That was a whipsaw. Too small a bracket. Oil, nothing happened. I probably would cancel oil. I would cancel oil. The news, very, very, very close to expected. Oil's a cancel. Gold was unsafe. However, Chantal, I don't know if you can look, but maybe that 25 bracket on gold would have been safe. However, I don't know that it would have. We'll have to look at the video. I have to look at the video. Remember, we had an old gold setup that had a much bigger. It had a 25. No, it had a 25 bracket, I think. The 12 bracket was too small. Was too small. Just going to watch the price action for a second. Now, the margins are still up. The margins are still up. Um, CPI is more than expected. Okay. CPI is a little bit more than expected. That's what I'm hearing. And I mean, it wasn't a lot. It wasn't a lot, but anything that gets people worried about the Fed is not a good thing. So the main number is a tiny bit higher, the index a little bit higher, but month over month, year over year, as expected, as expected. Now, this is not one of the reports that I was prepared to take a secondary trade on. Okay. It's a lot of risk. Just in general, there was a lot of risk on this report. Now, no whipsaw on 6C. Isn't that funny? ES had a whip, NQ had a whip, gold had a whip. Gold had a 53 tick whipsaw. Did anyone look at bonds? Now, Roz is saying it whipped on 6E. So let's take a look. Did anyone look at bonds? So bonds would be 324, not 323. Um, Look at that candle. That 1 minute candle. I don't think I've ever seen a 1 minute candle that looked like that in my whole trading history. I mean, I've never seen a 1 minute doji. I don't think I've ever seen a 1 minute doji. Gabe, you sure you were looking at 6E? 6E had a whip. got to really go to shorter time frames. Also, the absolute proof time frame is the one range. So there's 8:30, and there's a couple of seconds after. Okay, there's a couple of seconds after on bonds. ZN had a 24 tick whipsaw. Now, John, I'm assuming that was in sim. So remember, in sim, there's no slippage. Yeah, so it's you can't really count that that was real on this kind of report. You have to look at the one range chart. The only chart that tells you the truth is the one range. It's the only one that you can analyze what really happened properly. Even the 1 second is not fast enough. The lower the time frame, the more you'll see. Okay. So the 1 second, just to give you an idea how we would look at it, I would turn my cursor on. Okay. My cursor goes on. Our orders would have gone on the chart somewhere around here, 120. And we would have been, probably would have been filled short. Now, when you look at the data box also, it gives you an idea. It'll show you what the volume is for each individual candle. So one way you could try to figure out if it's an instrument that you didn't trade, author loves the volume. It makes sense. You could put volume on your chart also. One of the issues, though, so let's say you were thinking about trading the 6E. So our orders, right, just as a point of education, our orders would be put on the chart a nano, 1 second before 8:30, right? 1 second before 8:30. So 8:29:59 would be this candle. Let's say this candle would be our orders. So we would have had a bracket. Don't forget, you have a bracket you got to go through. So, if you want to calculate stuff, you got to draw some lines, right? Let's say our orders would have gone on here. And then you have your bracket, 12 ticks above. You have your bracket, 12 ticks below. So then you got to calculate where you might have gotten filled in an ideal world, right? In an ideal world. And you can also then look at the behavior, literally tick move by move on the euro. But you can see, you can even see in the 1 minute chart that the price went up and down. The price went up and down. Chantal, did you say you looked at the euro whip? What the whip was on the euro? And the 1 second chart is interesting, just in that it gives you more understandable visuals if you've never looked at a one range chart before. A 1 second chart looks more normal. It's real easy to find the beginning of the trade. And what's interesting is there's some volume at the moment of the trade. So Chantal can't even tell. Sometimes the market moves so fast, you can't tell where the fill might have been. It's not, remember what we say. Sometimes in a very fast moving event, you don't know what really happens unless you traded live. You just don't know what might have happened because of slippage and speed, all the elements that get you filled. All right. Um, Chantal, did you close? Did we? I wanted to say goodbye to. Did you close the stream? So MES on that 1 second chart. This was MES. Look at that. I don't think I've seen such a strange looking chart on a 1 second chart. Look at that crazy up and down movement. That is strange, strange, strange looking behavior. So let's take a look at the video. Let's take a look at the video. Um, no question, watching gold on that trade, it would have failed. It definitely would not have been a good trade. No matter what, it made sense. No matter what, it made sense not to trade this report. Why do you have to suffer? Why do you have to put yourself through an event that doesn't give you a good opportunity for profit? You don't. You don't have to. There's other reports to trade, right? We go over that all the time. Trade opportunity. All right. I'm trying to think if there's anything we didn't look at. Is there anything we didn't look at? Oil didn't fill, gold did a whipsaw. People are reporting that the NQ did a big whipsaw. Now, Adam's saying that he took a short at the high on gold. All right. After the report, let's take a look at the video and then we'll get ready. I'll tell you what's doing later for the rest of the day. So the markets in general have sold off a bit. I don't think they've crashed on this news by any means. But I think people were expecting the news to be lower, not slightly higher CPI. So it's certainly not construed as good news because it was a tad, looked like it was a tad higher. So here's the video. I'm kind of sorry I didn't, I'm sorry I didn't watch the euro, but there was no way I would have traded the euro today, no matter what, especially because of the mixed volume. It just made it even more difficult to get a good fill. Doesn't mean you couldn't. Watch gold. Now, Chantal said that gold had a 53 tick whip. Did you say a 53 tick whip? So you see that kind of move. When we see this kind of a move, so what would have happened is we would have gotten filled probably towards the top of that candle. If you realize that even in sim, the fill was at the top, almost at the top of the candle, it would have been worse. It would have been worse, possibly, on the move up. Yeah, that's what I was thinking, Chantal. It looks like it's about 20 something ticks on the move up. But let's just watch it in real time just to get a sense of the speed and the number of direction changes. Watch. First thing it does is go up, fills you, it goes down and stops you out. No way you would have made money on that trade on gold because you were long. It chops around like crazy. Now, if you got filled short, we could have made money. So maybe we could use a bracket of 30 on this report. So it went up. And then on the way down, maybe if you got filled short. But again, the real issue is why suffer? Why suffer through such a difficult event when you don't have to? You don't have to. If we would have traded gold this morning, we'd be licking our wounds. That's the truth. Licking our wounds. Same thing with bonds, it looks like. Anyway, look, 4 losers in a row prior to today just tells us to take the day off on this report. So that's what we did. Now they're saying US inflation slows to 3.1. So what's interesting is all of a sudden, that was the forecast, was 3.1, but the month over month is what was a tad higher than expected. The year over year was as expected. Okay. Any questions, folks? Let's look at the schedule. Let's look at the schedule. I think, therefore I am. What's that from? Give me some help, folks. I've got all this junk in my head, and half of it I don't know where it's coming from. I think, therefore I am. Do I have to Google it? I have to Google it. All right. I want to show, does everybody want to laugh? Does everybody want to spend 5 minutes laughing? Or do you want to just leave? You tell me. Tell me if you want to spend 5 minutes laughing. So I want to thank everybody on YouTube. Thanks so much for watching our free stream. And hit the like button on your way out and keep an eye on our notification bell for the next time we stream next week. And thank you, everybody on YouTube, for watching us. We really appreciate it.